Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, are there any signs of fear in the equity market yet?
You know what? There is, but it's not from the investor or the short-term trader. There is a big lack of fear right now in the overall investor kind of market. We can see this on all kinds of different levels. If you look at the put-call ratio, that is telling us it's very low. It's actually at lows that we've seen before back in 2007 during the bull market top. We saw it in 2008 just before the stock market fell 20%. We saw it again in February, just before the stock market crashed 35%. We're back down more or less at those levels based on the opening price. And this to me says, hey, there's the majority of traders and investors out there are buying leverage, expecting this market to just keep on going up. And there really isn't any fear. And that to me is always a warning sign. So we've got to be really aware when everyone's not fearful. And when you look at the bond market and utility sector, they've been flatlining since more or less March. And those are two defensive and protective asset classes. If people are nervous, they start to move some money to bonds. They'll move to utilities as a defensive play because utilities tend to pay dividends. No matter what happens in the economy, people still need running water, they need electricity, all those things. But we're not seeing anyone want bonds or utilities at this point. What people are focusing on is they're piling into tech stocks, they're moving into consumer discretionary stocks, which are all the things you don't really need. And I was on TD Ameritrade earlier talking about this, that we're seeing all the wealthy and the affluent people are benefiting from COVID. A lot of them are. And they're buying lots of consumer discretionary things. You can't go and travel, so everyone seems to be upgrading their homes, their offices, buying all kinds of, toys for staycation, holidays. And so all these sectors are really high flying, and people are really evolved or emotional in buying the tech and the consumer discretionary. So they're not paying attention to any of the economic sectors, which people like to turn their back on bad news and let it happen behind them, and we're not seeing them pay attention to any of those sectors.
We'll have more with Chris Vermeulen right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Are people getting into biotech because they're hoping that they'll pick one of the one or two companies that come across with a successful vaccine for COVID?
Yeah, they are. There's a ton of movement into biotech. I mean, it's performing very well for the year since the March lows. To me, it's still a lot of a landmine. But we are starting to see biotech, or more or less vaccine news, start to hit the headlines a little bit more, and it is market-moving news. So there's definitely people moving into those sectors because they're exciting, and as you probably know, biotech companies can have some crazy moves on approvals and in new phases, stages that they get into. So yeah, those technology and discretionary stocks are really the high flyers. And the ones that people are completely turning a blind eye on are the opposite, the economic kind of strength, which are the energy sector. It is performing terrible, meaning people are not expecting the economy to keep growing and expanding. There's a contraction in energy. Financials are not doing well at all. They're way off the February highs. You look at the airline sector, like there's an ETF for it called symbol is JETS, and it's performing terrible. And you look at hotels, casinos, no one really is interested in those. They've been performing fairly bad, and those are really the sign of how healthy the economy is. So the fact that those sectors are all doing very poorly is kind of foreshadowing that things are not looking good several quarters down the road.
And is there also fear to get into that sector because the company you invested in could go bankrupt?
Exactly. Yeah, you could get pennies on your dollar. I know a lot of people are bottom fishing and trying to pick up airlines. To me, it's a huge gamble because you never know what's going to happen. They could get delisted, go bankrupt, and you end up losing a ton of money. It's a real gamble at this point. There's going to be bailouts if there aren't already, but I think it's definitely a gamble trying to get into some of these really volatile companies like the airlines and probably some casinos that are just going to be, go under, belly up very quickly.
We'll have more with Chris Vermeulen right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, are people looking at defensive stocks?
No. So people are not interested in defensive stocks at all. They're going quite the opposite. They want the high flyers. They want the big tech companies. We're seeing a lot of people moving into the shipping companies like UPS, FedEx. I mean, these companies are all up huge. This really is the perfect storm for technology and shipping companies. Defensive, completely out of favor. And it's interesting because the general public, investors and traders, are not nervous at all at this point. But when you go and you look at the institutional side and what the big money and the people kind of managing the financial system are doing, they're all starting to prepare for what I think is going to be another really rough time in the markets. And you and I talked about this months ago, that once that March low was put in, we had this knee-jerk reaction, bounce, and rally. Usually the market comes down almost always for a double dip, and that is a long ways from where we are. And what did we see last week? We started to see brokerage firms tightening their margin requirements, meaning you have to have more cash in your account to own the same amount of shares. Now, Interactive Brokers issued a margin change. One day it was going to be implemented. The next day, the very next day, the stock market fell like 2 or 2.5%. And that happened. I have a feeling it was a big portion of what happened in the markets making it fall was simply because the majority of traders, just like when you go to buy a home, you always buy the one at the top end of your price range. You can barely afford it, but you want it because it's nicer. People do the same thing with stocks. They buy as many Apple shares as they can, as many Amazon shares. They buy as much gold and gold miners, and they use all their margin in their account. And then when the broker says, "Hey, we're tightening our margin requirements. You need more cash," these people the next day are forced to, they have to pick and choose which ones they're going to sell, which creates a wave of selling. And then for those who never saw the email, the brokers automatically start liquidating whatever's top of their portfolio list throughout the session. And that, I think, is what started to trigger a sell-off in the market. And because there's very little liquidity volume in this market, once the fear started, once they started selling it, the selling started, more and more people started to just kind of pile on and eject out of the trades. And I think it was a big portion of what happened last week. On top of that, I just found out just before our call that the CME, Chicago Mercantile Exchange for Futures, is loosening their circuit breakers. So instead of the market falling 5% and they throw a circuit breaker into halt trading to protect everyone, they're opening the gap so the market now has to fall, I think, 7% for a circuit breaker to kick in. So brokers are worried. They're protecting themselves. The indexes or the exchanges now seem to be loosening. It's the opposite of what they should be doing, in my opinion. They're allowing the markets to be more volatile because I think they don't want the circuit breakers to get hit repeatedly like we saw in March. It causes panic when things keep shutting down and hitting breakers. So I think they're expanding these breakers so that they don't happen as frequently, which means they're expecting big volatility. Volatility means lower prices. And things are going to probably get pretty exciting as we go into elections and the year end here.
Are gold miners still a bargain?
I do like they are trading just like the.
Chris, we had a big bloop there. I'll ask the question again.
Okay.
Chris, are gold miners still a bargain?
I think they are still exciting. I think there could still be some more upside, but the problem is they're trading underneath their key moving averages, which is the 20-day and the 50-day. The stock markets are also under their 50-day moving average. That means we are in a downtrend. Sellers are more or less in control at this point. And if the stock market does sell off, we're going to see gold miners continue to get sold off and fall with the market. They are still trying to act as a safe haven. They're performing exceptionally well today when the stock market is down. But that when there is fear in the market, the gold miners get dumped and sold just like the rest of the market, and they fall a lot faster than, say, the S&P 500. So I'm concerned that if this market rolls over, gold miners are going to get wiped out again and get reset. And I think there could be a much better opportunity around the corner. But we really need to see if this market is going to have a final flush out here and sell off over the next 15 days, because based on cycle analysis, where I take the most active 5 cycles in the market, blend them together, and then detrend them, I can get kind of a price pattern going forward where the stock market should go. And that price is lower over the next 15 days. So we could see everything under pressure. The dollar and bonds may start to lift and rise here. And that's what I'm seeing going forward in the near term.
I was just going to ask about the U.S. dollar. It was fading. Is it picking up again?
Well, the dollar's down about 0.5% today. Pretty big down day, but it has put in a bottoming pattern through more or less July, August, and this part of September. Last week it broke into a new uptrend. It's above the key moving averages. It's broken resistance. It has a bullish price pattern. And this is the first pullback this week. This is the first pullback in a new trend. The first pause or pullback in an uptrend can be bought. So right now it's just working off a little bit of a rally that it had last week. And I think it's going to end up continuing to move higher. That is going to be a bearish sign. If the dollar moves up, that means big money is moving into the U.S. dollar, and that means they're liquidating positions in the stock markets and commodities and trying to just protect themselves. So that is a bearish sign if we see this dollar reverse and start to rally later this week.
What's going on with Bitcoin?
Bitcoin has got a bearish bias at this point. I'm seeing it potentially move down to around the $8,900 or the $9,000 mark. It's created a bear flag since the beginning of September. It's had about 4 or 5 big down days. Now it's been trading sideways, stuck under the 50-day moving average as well. And this pattern is pointing to around $9,000. It's currently trading at around 10,800. So there's quite a bit of downside. The $1,800 per Bitcoin move going forward. And we've seen Bitcoin move very similar to the U.S. equities markets during big volatility days. When there is panic in the stock market, you can almost put the SP 500 chart and Bitcoin together, like the 5 or 10 minute chart, and they actually move in sync together. They're very tied with the emotions of the overall financial markets when there's extreme volatility. So again, I think everything is going to get pulled down if this stock market rolls over here in the next few trading sessions. I see quite a bit lower prices over the next 15 days, and then I think we're going to have a substantial market bottom and some type of multi-week bounce.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or the show, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.